Hello and welcome to Financial Intelligence. These days, everybody is talking about inflation and how it can impact their life savings. In this video, I want to share with you Warren Buffett's perspective on how you can protect your portfolio against inflation. His position is that during inflationary times, companies with wider economic moats tend to do better than their competitors. An economic moat refers to a long-term competitive advantage which enables a company to become the de facto monopoly. In the first part of this video, I'm going to share with you how inflation impacts companies from an operational point of view and why companies with wider economic moats tend to outperform others during inflationary times. Then in the second part of this video, I'm going to show you how you can identify these companies, and in the last segment, I'm going to share with you one great ETF you can use to invest in a basket of companies with wider economic moats. If you like the type of content that I provide on this channel, subscribe to the channel and give the video a thumbs up and also hit the notification bell so that you don't miss any of my future videos. A disclaimer before we get started. Note that I'm not a financial advisor and opinions expressed in this video are based on my research and are for educational purposes only. For professional advice, you should talk to a financial advisor. Part 1. Economic moats and inflation. Conceptualized and named by Warren Buffett, an economic moat is a distinct advantage a company has over its competitors which allows it to protect its market share and profitability. It is often an advantage that is difficult to mimic or duplicate, such as a brand identity, and therefore creates an effective barrier against competition from other firms. In order to appreciate how companies with economic moats outperform others during inflationary times, we need to look at how inflation impacts them from an operational point of view. Inflation is the rate at which the value of a currency is falling and consequently the general level of prices for goods and services is rising. For instance, this image shows the average price of a cup of coffee over time. The same cup of coffee today costs more than 6 times what it used to cost in 1970. We all know that companies need to pay for labor and raw materials to produce products or offer services. When the general level of prices increase due to inflation, the cost of offering those products and services increase as well. Let's look at a simple example to see how inflation impacts companies from an operational perspective. Here we are going to look at a simplified coffee shop business model. Assume that in the absence of any inflation, coffee beans needed to make a cup of coffee cost 75 cents. The owner of the coffee shop can sell it for $1.75 to make $1 per cup of coffee. Now, if due to inflation, coffee beans become more expensive and cost $1 instead of 75 cents, the coffee shop owner has two options. Either to keep the price of a cup of coffee the same and accept lower profit margins, or to increase the price of a cup of coffee and accept the risk of getting less business. In general, for many companies, these higher costs will force them to choose between raising prices at the risk of losing market share or keeping prices down but seeing smaller profit margins. Either way, inflation hurts. Companies with strong competitive advantages do not face this dilemma. In theory, firms with strong economic moats can pass these costs onto consumers, keeping margins high without threatening market share. Part 2. Wide-Moat and Undervalued Stocks. Now the question becomes, how can we identify these companies with economic moats? The answer is that we can use online tools offered by Morningstar, which is an independent investment research firm. You can actually create a free account on their website to access the data for free during their 14-day trial period. I will add the link in the description box below so that you can check them out for yourself. Morningstar has created a list of Wide-Moat stocks using their unique ranking methodology. Morningstar's ratings for economic moat capture how likely a company is to keep competitors at bay for an extended period. One of the keys to finding inflation-tolerant long-term investments is buying companies that will be able to stay one step ahead of their competitors. Furthermore, Morningstar has shortlisted wide-moat companies that are currently undervalued based on their stock market price. In other words, these are companies that are trading at a discount to their fair value based on Morningstar analysts' estimates. I really liked this report because it provides a curated list of inflation-resilient stocks that you can buy at discounted prices. I will also add the link to this report in the description box below so that you can take a look. Part 3. Buffett-style Wide-Moat ETF. Most investors rightfully prefer to diversify their portfolio by investing in ETFs rather than individual stocks. The good news is that there is an ETF that enables you to do just that. VanEck Vector's Morningstar Wide-Moat ETF, or moat for sure, is created to replicate as closely as possible the price and yield performance of the Morningstar's Wide-Moat Focus Index. The Morningstar Wide-Moat Focus Index tracks companies that earn Morningstar economic moat ratings of wide and that are trading at the lowest current market price to their fair value. You should consider this option if you are planning to invest in an ETF that gives you exposure to inflation-resilient stocks that you can buy at discounted prices. One thing to note is that the management fee of this ETF is 0.48%, which is relatively high. In summary, this ETF offers investors exposure to stocks that should benefit long-term from their moat. Additionally, this ETF would be another way of protecting your portfolio against higher inflation and reducing your risk of being exposed to a supposed tech bubble. I hope that you liked this video. If you have any recommendation or suggestion, please add them in the description box below. Don't forget to like this video and also subscribe to this channel and hit the notification bell so that you don't miss any of my future videos. Thank you and take care.